You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi. Good morning.
Hi,
it's
morning.
a Friday, so faces are up, chins are up.
The biggest cue of the day.
All right, we've got the day to get by though, so let's get this started. You've got basically more of the same in terms of US markets, which were down. The S&P was lower. You've got the Nasdaq, which was down by about 1%, 1.75%. So tech is clearly under more pressure. Value still relatively did a little better. The dollar is on the rise once again. So the dollar index hit 113. And right now it's at about 112.78, a little better as compared to where we were at New York time, but I mean worse off as compared to yesterday. And the SGX Nifty, well, it continues to be in a completely different space, and we're up about 15, 16 odd points. Flat kind of start is what we have. The question is, you know, the resilience and the outperformance has been there as a constant feature all this year. Will this continue to power our markets up even as the rest of the world starts to suffer once again? The rally in the US, the 10% rally, is more or less done. But what about here? Guys, good morning.
Hi, morning Prashant, morning Nigel. Morning. And in that context, our own markets were quite resilient, right? Yesterday, I mean, 18,000 was holding firm amidst all the volatility. This morning may look a bit different because Wall Street has extended its losses, and it's now 4 straight days that the US markets have been under pressure. It was a steep cut yesterday as well. And give and take everything for the week too, you know, the S&P 500 is down almost 5% this week. The Nasdaq is down about 7%. Later in the evening, you have the US jobs report that comes out, and that cue is crucial to understand about the pace of future rate hikes. So the October jobs report is expected to come in at about 205,000 jobs. The unemployment rate is expected to be steady at 3.5%. In anticipation of that data, perhaps our markets could be in pause mode because we also have the weekend and there are SBI's numbers tomorrow. SBI's numbers could be a big cue for the PSU banking space, which has done very well. So a lot of cues stacked up, and in that context, perhaps the Nifty may pause around this 18,000 mark. We are still just a smidge away from that, 18,352 week high. But for now, the SGX Nifty is indicating that the start will be mildly in the green. The resilience is there, but today, because we're heading into a weekend, next week is also a truncated week, and you have some big cues coming up like SBI's numbers. Maybe, just maybe, there could be a pause.
I mean, it looks like we're going to be in a range, right? I mean, there is not too much to take this market higher, and the downside is protected because the market here has got that kind of fundamental lift, so as to speak. All right, let's just quickly run you through how things are looking. So US equity markets were down, as I said, tech more under pressure, and I think we saw that we saw similar kind of price action the last trading session in the US. Tech here sold off as well. Cognizant, of course, numbers did not help. The yield market is reacting once again. So the 2-year yield, and this is market interest rates, which are very meaningful. The 2-year, the front end of the US yield curve is gone up. You want interest rates lower, not higher, but for now they are headed higher. The 2-year yield is at about 4.7%. The difference between the 10 minus 2, remember that, I mean, if you're paying a bond for the next 10 years, you're paying for the bond for the next 10 years, the yield that you expect, because you're taking the risk for a longer time, should be higher than something which is of a maturity of 2 years. But the 10 minus 2 is now negative, and that negative is basically called inversion, and the inversion is at a new high. It's minus 58.4, the 10 minus 2, and that basically indicates that the economy going forward is going to have a tough time. The DXY index, that's a dollar index. I mean, actually, dollar outperformed pretty much all other currencies. The dollar index was at about 112.78. On the DXY, you got a second outside bullish day, which basically is an important, significant bullish indicator. And I think what this means is that the dollar should push through higher eventually. It's not been able to do that. I mean, 117, 119 kind of targets has been talked about for a while. That's not happened, but we'll see if this comes through now. US jobs data tonight, I think always important. But, you know, the bar for this to really move markets has gone higher because we've just heard from the US Fed chair, all of the hawkishness coming through from him. So only a very large miss in the jobs data, and that seems unlikely because we got claims data, right, which inched lower. Jobless claims data out of the US, that's high frequency indicator, which inched lower. So it would have to be a big miss to offset hawkishness that we just heard from the FOMC, the Fed chair. Nifty near-term support levels at about 17,960, which is, I think, also sort of the low that we saw yesterday. It's also the 40 exponential moving average, 40 hourly exponential moving average. The weekly averages are far below. So, I said this yesterday that eventually maybe you kind of drift down to that because the upside seems to be a little capped because of the global environment. But it's at 17,540. So we'll have to take it as it comes. The swing high, recent swing high, is 179, beg your pardon. And that is the level to take out on the upside. That is the high that we saw in trade on the 2nd of November. So those are levels to really watch out for. It's a narrow band for now, narrow range for now. The SGX is indicating that, and we'll just kind of trade off some of these levels as we start another session. Nigel, what are you watching?
What an exhausting week, right, guys? I mean, 5 whole days of work. It was quite...
I thought somebody, Sonia, said that next week is a holiday truncated week.
Yeah.
But I'll tell you the bad
Somebody
news.
would give a shout out.
That's the last one for the year. That's the last holiday, and then till December there's no holiday.
There's just 1 more month left for the year anyway.
Two, because November 1st.
And 2 more months for the year.
I'll be on leave in the last week of
Nigel has
December.
got the numbers and the dates all written down.
All right,
We'll take what we get, right? Holiday with the first or last will do for us.
All right. Well, yesterday the bulls took what they got, right? Yesterday was a good outperformance that we saw on the Nifty. In comparison to what the globe did, well, the bulls will be very, very happy. But some of those headwinds do persist, and we need to take note of that. This morning, the dollar index has moved to around 113 odd. And in this sort of a backdrop, I'll be interested to see what the FIs do. They have been buying the Indian markets for the last 6 trading sessions. They've been pumping in close on 2,500 crores on an average. But yesterday, in fact, you had the lowest buy inflow in comparison to the previous 5. And on average, this 5 days, we saw an average of 2,500 crores odd. So the FI flows become extremely crucial. The FIs in the F&O market, we were saying that this market is net long, which is not such a good thing. Seems they heard us. They've gone ahead and they've added some short positions, close to around 15,000 short contracts, 4 shorts added for 1 long position. This is not a bad thing. We keep saying this because in case the FI flows dry up, then the shorts in the system could give a bit of a fillip if the markets do start moving up. Long short positioning as well continue to remain net long on the index. Now on the options data, there seems to be a bit of a trade that's playing out there. That's a short straddle. What is that? You write the 18,000 call as well as put. The same strike, the call as well as put. You pocket closer on 300 rupees because on the 18,000 call, premium is around 180, 190 rupees odd. On the put side, it's closer around 105 rupees odd. So put that together, you're pocketing closer on 300 to around 330 rupees odd. And then you're playing for a broader range. Close to around, on the downside, 17,700. On the upside, close to around 18,300. My guess is that, the buy on dips is likely to continue, but you'll require a bigger effort for the Nifty to go ahead and break that 18,300 odd mark. That's a bit of a barrier according to me. 18,250, 18,300. For starters, the SGX Nifty, well, it's indicating a more or less flattish start. Sonia, what else?
Okay, a more or less flattish start for the SGX Nifty. Today is also a big day, right, in terms of earnings. You have lots of numbers coming out. There's Britannia, there is, of course, a lot of auto companies. There's TVS Motor coming out with numbers. There's Titan, Walcott, and a long list of mid and small cap numbers. And then tomorrow on Saturday, there's Bank of Baroda, there's State Bank of India, there's Power Grid Corporation. So we have our hands full in terms of earnings. But here's what you can see in the next 2.5 hours. First up on the equities front, we have a comment coming in from Chris Wood of Jefferies, who says that the Fed tightening expectations are now at their highest since this tightening cycle began, following the Fed Reserve's universally anticipated hike in the federal funds rate to 3.75 to 4% yesterday. He says money markets now expect a peak in the federal funds rate at 5 to 5.25% by May 2023. He also says that greed and fear's guess is that this is the peak in tightening expectations, barring some Ukraine-triggered surge in energy prices.
Well, Lawrence Belanco of CLSA says that the Nifty's rally of support provided by the 200-day moving average is now testing overhead resistance, suggesting that upside momentum is slowing. He says the combination of cited resistance with slowing upside momentum is likely to result in market remaining range-bound within the 18,152 to 18,539 to 15,178 to 15,500 trading range. He says a clear break above 18,152 to 18,539 would confirm bullish implication, with such a move providing an upside objective of 20,185. On the downside, he adds, a break below the 200-day moving average would imply a deeper pullback.
Okay, let's also get you some money market views. This assumes importance given all the global, data that we're getting later this evening. Bhaskar Panda of HDFC Bank says the US yields have risen after the expected 75 basis points rate hike and the hawkish tone from the Fed, and US terminal rates are getting predicted above 5%. He says oil is down a bit and so is the dollar index this morning ahead of the US jobs data. He says markets will remain volatile and uncertain given this global backdrop. He expects the dollar-INR pair to remain a bit under pressure. He expects a range of 82.60 to 82.80 for the day.
Well, on bonds, Bhaskar Panda says US rate hikes, inflation concerns in India, and the MPC all play into a little higher yields today. He expects the 10-year benchmark bond yield to trade in a range of between 7.45 to 7.55% for the day. Okay, so that's views across asset classes. Michelle Kluwer is portfolio strategist